Welcome, guys. How are you? Francis Hunt, the Market Sniper, giving you an update on gold primarily. And what I tend to like to do is always be frank technically in terms of what the technical signals are going to be doing. Now, we're massive bulls gold. We have pure gold link below, by the way, and also for ITM trading for purchasing gold in the US. But one thing we'll always say is if we see something technically is going to potentially go down for a bit, we'll not say it's going up. We're macro bulls on gold. We are sometimes antagonizing those fellas that are the dollar bulls, but we are macro bulls on gold. But every now and then, there's going to be a pullback period. And the biggest time frame charts are the monthly, typically, that I look at. I sometimes go to annual and 6 monthly. But if I'm looking at this particular chart, I'm going to switch the lights on. Let's pivot to the charts there and highlight this. You'll see a couple of levels that have been drawn here previously that we've spoken to. So you'll recall this was a broken resistance, turn support for an upside move. Now, if you have a look at our draws, you'll notice, and let's just take the lights off a little bit as well, we're highlighting how strong that 2000 level was as a resistance. This was the first month, by the way, that you actually closed above 2000. So just going back to the precious metals and taking the lines off, keep on a clean chart anyway. The one thing that we do highlight is that candlestick analysis on the lower time frames does have the tendency to occasionally highlight where there's been clear resistance. Now, I thought it was kind of funny that Bloomberg and everybody was announcing, hey, China's done buying gold for now and selling treasuries, as if China's going to be like telling everybody, hey, for those of you that want to front run our book, we are not going to be buying anymore. Well, I expect, given the recent moves of gold that's taken it from not much above 1600 in 2022 to the highs of 2450 in quite a short period, that it's very unlikely that, in fact, they're going to want the gold price to move too much more. But I expect they would continue to want to distribute treasuries. Don't forget, by the way, our Substack on the imagery, which was highlighting, I think it was Tabby Costa, don't forget Tabby Costa interview as well on our YouTube channel. It was highlighting the distribution of the treasuries, the red line over here, going down by Chinese holding versus the accumulation on the white side of gold going up of China. Now, if you think this is the Chinese just playing tactical games, this is something, by the way, that has been in place literally since the data started in 15. That's where treasuries were, that's where gold were. For the scaling, they're on either opposite sides there. The trend has been down for a sustained period in the same way that this trend has been up. Now, if you think Chinese play the short-term game, then maybe you can believe these stories. Our overall take is they play the long-term game, and that, in fact, they intend to continue to accumulate gold and disaccumulate treasuries at every possibility. However, after there's been a fairly aggressive upward surge in the precious metals, as you've seen there, and also let's not forget quite a unfortunate capitulation in the value of treasuries, they may not want to create the market into a disorderly space where there's a melt up in gold and a debt crisis into the American treasuries markets. So they might back off a little bit from this. We're going to get a bit of disinflation, a bit of fear, a bit of contagion, try to let the bid come back into the treasuries, and then they might distribute very, very slightly, not to overly affect the market while others are buying. And in the gold environment, they might not buy so much. They might just back off and just let it pull back a little bit and just trickle small ordering in. But the intention, long run, is shown by the bigger time frame charts. We want to accumulate gold and disaccumulate your debt, America. That's the overall trend. So let's not lose perspective of the forest for the trees in terms of time frame. So we are talking on time frame basis that you may in fact get a pullback in gold for a bit. And why do we say that? Well, if you have a look at these key candles that we're seeing over here, this is what's going on. And a wick, another selling wick, marginally higher high here, another selling wick, pushback right down, and now don't forget we're in the 26th day of June, so there's not too much left of this month. You're going for the first red month in quite some time. This was a small, insignificant red month, and the last time before that was over there. That took you to about June or July, probably July of 2023. This was very early. This was Christmas turning New Year 24. So it's quite some time since you've had a red month of any form in the precious metals gold, and you have had the warning that there is rejection selling at these levels. So this could be derivatives or people saying don't let the price run, don't push new buy orders when we're at 2,400. Let it come back, let it come back. And why do you think 2,400 be such a sensitive level? Well, the next big logical round number from the 2K level, which is the number we had drawn for you, which had been resistance, put the lines back on, the blue line over there, that saw you be resisted for the better part of from July 2020 all the way till the first month you broke through it, November 23. You're talking about 3.5 years there in terms of those things. And now you're getting your first red month and a pullback. So the selling wicks point to something, and that could point to dollar easing back down in the direction of that said support, although I wouldn't say it's obligated to return that far. You could indeed get retracements in to the 2,100 levels, maybe just below 2.1, maybe just below 2.2. So I would suggest that there's a possibility of a pullback in and around that space level. If it's not too harsh, it might stay above 2.2 overall. Let's just drop it down to a lower time frame to see what we anticipate for gold. So again, gold price. This is a little bit of a slightly awkward pattern for precious metals as well. It's kind of got the whiff of a head and shoulder. I think we can squeeze the daily in there. And you know me, we specialize in continuation, so we've learned to be kind of experts in reversal, because reversal is not your friend. And what I'm highlighting here is a sell-off down there, a weak rally, and a sell-off to what is a key level of 2,300. We put the line on there. Let's just put him in there, put it blue. We can fatten him up for you so he pops a bit more. And 2.3 is the number. We don't need all those decimal places. That's my OCD done. And you're looking at a head and shoulder structure. Now, when you have head and shoulder structures, it's quite possible and feasible for those things to actually provide targets. And that's kind of useful. So we have already tested the neckline again of the round number of 2.3. And what do we need to do? Well, we need to do the following. And I'm putting in a measurement line in there, and we are going to measure for it. We're on the 10-hour time frame, and that's right, and put that in there. We're putting it in red. So gold to have a sell-off would be the call, and there would be a target of around 2,150, which I was insinuating with the possible run of a 2.1 stroke 2.2 level. So that's kind of where I would see the precious metals coming down. That would start to represent a really interesting accumulation zone here. Is it the perfect head and shoulder? It's not bad. That's pretty strong. I think there's a decent chance this comes about, so be careful out there. Broadening structures here for right shoulders. We teach all about that in our program, by the way. Book a call below on the very first link. As I say, accumulate, set orders to accumulate at 2,150, 2,100, and you can notify Pure Gold below or ITM Trading if you're US based for those things. That would be the squeeze, which was inherently bullish, and then that was your channel up for your up leg. That gives you the head. And since then, quite an abrupt sell-off, a secondary sell-off, and then you're having a third that's brought you down. Now, it's quite typical to have a soft rally off the key level of 2.3. So every time you trade just below 2.3, there's buyers at the 2.2s, 2.290s, 2.270s, 2.260s, up. They'll buy up until they are satiated, and then that's when you can often have a correction. This will likely be associated with some events as well, some event risk. So there will always be a narrative that gets toe tagged on to the overall story. Oh, China's now dumping. Oh, everybody needs dollars. Some sort of, whoa, the war, the bond market, everyone's afraid, stock market selling off, it's risk-off environment, Let's all buy the dollar and treasury bills for a while. Good luck. I won't be part of that. Can rally. Dollar can rally. I'm happy to trade the USD against the JPY, but I'm not going long dollar against gold for too long. You could put on a short tactical here. If I did it, it would be very tight stop. And I have traded precious metals short, by the way. So we're not evangelical about direction. Just because it's a long-term long on the investment cycle doesn't mean it can't sell off in the near term. So that's kind of where it is on that. 2,150, that would be our pull for the dollar side. And of course you could expect miners to reflect that a little bit as well, and that's going to ream it all back. It could be a risk-off environment more generally for possibly equities as a whole, not just minor equities. We can speculate, but the news will come. Overall, my anticipation is there's a risk that gold could go down to the 2,150 levels. Also, by the way, it doesn't have to happen immediately. So we can be wrong in the short term and actually get quite a nice rally up here, and then it can churn and come down again, and it can bounce around for a while and set up, for example, a descending triangle, something like that, on that level. And there could be evidence of real support at the 2-3 for quite some time before eventually you get that break. So we're not saying straight after this candle this is about to happen, but overall there's that risk. So am I a big accumulator now? I think better prices await for you on the gold market. Okay, by the way, Rick Rule is running a symposium. It is running from July, I think the 7th. It's a 5-day event at Boca Raton. We will have the link for the event in this YouTube video below, and we intend to pop in there as an attendee. So if any of you are in Florida, in or around the area, or contemplating going to the Rick Rule Symposium, come and say hi to us. We'll be in the crowd and the audience as an attendee only, and just looking forward to network with fellow resource commodity based people that see the value of physical things in this metaverse digital paradigm that is being lowered over us. Okay, so for those of you in the States that will be attending that, keep an eye out, come and say hi to us. We look forward to seeing you. Thanks so much and enjoy the video.